Alright guys, welcome back to another video, and today is going to be something a little bit different. But before I get into it, if you can do me a massive favor and check out the podcast in the description below. Real Forex Journey, obviously it's by me, proper, transparent and everything. I don't really plug it that often, but like I said, check it out if you want. And also there's a recent video I did where I offer 1 week of free one-to-one mentoring, so if that's something you're interested in, again, I'll put that in the bio or description of this so you can check it out. And if you're, like I said, if you're interested in, I'm not, like I said, I'm not a salesman. I always say that, so it is what it is. But what we're going to do today, I'm going to walk you through this little strategy I've developed, and not really the concept in itself, but how I'm looking to develop it further and what I've been doing basically, and my approach and why I'm going to do these actions, right? My reasoning behind it, because you know, for others it might be different. Everyone develops their strategy in a different method. So yeah, that's why I wanted to go over my methodology behind this. And I would say it's new. I mean, I don't know, I always sort of twist and turn. I don't have a set method for every single strategy I test. It's more of a what I feel is right, and I'll walk you through what I feel is right for this strategy. So the concept behind this, as you see, this is a quite an RSI based strategy. You would have seen it in my daily day trading predictions if you've been watching it, that you know, it's heavily based on RSI. Sometimes you'll see me just like not even have the actual RSI up. I'll have like a variation of it, and you know, something that's based on this. Now, first impressions, you're looking at this and you're like, oh my god, it's negative. Do you know what I mean? Like this one, let's see the money management. Oh no, it's negative. It was all going good until this week, and then you know, failed. You see, here's the pips amount. Oh no, you know, all whatever, 28 win percentage. But in my opinion, this is not the reality of this system. Now, first little things first is just by me changing up my order. So using a sell stop or a buy stop in this case, you would have seen, right? So this is, I recorded a price entry, so you'll see on the other spreadsheet I've sort of swapped it around the actual price, because obviously if you're gonna add a sell stop, the price entry point varies by however many pips. So obviously you've got to record that. So I'll show you all the trades without that, well, yeah, without that sell stop or buy stop order, and as you see, hugely negative, right? So we're talking, I mean, at the bottom of your screen you'll see here 1.5k pips. I don't really care about the pips, and we'll sort of go into this later, but let's assume for one position, all right, where we are saving 33 losses. This is so 33 losses that we're avoiding, which is obviously a bit better for our win percentage. And the average loser of this, again, I'll zoom out so you can see what I'm looking at here, is 10 pips. Now this 10 pips is basically, for me, the sacrifice of that is 3.5 pips per trade. Reason being is my sell stop or buy stop will be 2 pips, but obviously sometimes, you know, price closes halfway through the candle, and on average it's 3.4, so obviously I round it up to like 3.5, even 4 pips. But either way, it instantly improves the system, right? In the sense of, look, we're getting much less losers, right? And it's only at the cost of a little bit more in terms of risk reward and whatnot. Now, what I don't really like about this is that towards the end, I mean, if you've noticed pound dollar in the last month or so, it really picked up ATR. So some of these losers, I mean, when you look at it, right, it actually started averaging out a lot less. So you see here, we're looking at single digit a lot frequently. So the average loser was around 10 pips in general, and you know, as the ATR went up and up and up, you know, that increased, but that's fine, you know, it's part of it. But I don't really hold value to that too much. For me, I will show you towards the end obviously what I do. I basically make it equal weight every single trade despite the pips. So let's say I'm doing if it's a £1,000 account and I'm risking £10 every single trade, that's the way I sort of value things, right? Now I'll walk you through the adjustments, right? So again, you see here this is 6 methods of getting out the trade. So we've got target, discretion, 60 EMA, trail, ATR, outside return, extreme hook, before target, that's what BT stands for, RSI invalidated, 2 pips trail, and then half of T1. And obviously that's just for my own strategy, my own self, and I'm tracking a bunch of stuff here RSI strength, swing order, complex pullback on the RSI, which I've got a definition for, high and low of the hook or before the hook. So I'm tracking a lot of things that I can play around with. So I'll delete this and we'll move on to, let's see what comes up. Right, so this is my adjustments, right? So out of this, I basically decided to leave these three. These are the three things I'm interested in terms of exits: target, and then half a target one, just as a almost as a trail slash risk precaution, rather than okay, target goes there because I want it to be. And then obviously that, and I filtered out the stop price entries, so I've adjusted them, and you wouldn't see the equity curve, but it's still is barely positive. Now this I'm only doing 2 positions. It's around 100 and let me see. It might even be negative. I can't remember. Let me see this quick. It's 97 pips in 122 trades, which isn't great, obviously. But the principle behind it, like I said, you see here towards the start, it's whatever, right? Big winner here, small winner, small losers, and then the ATR went up, and that's what I mean. So towards the end of this, you'll see much. Look at this, 63 pip loser. I don't see this often. 99, that's a huge one. 67, 83, 116, and that's just because the ATR has been increased so much that end of the day I ended up taking, you could say, these 58 pips initial risk, and you know, sometimes I might be able to trail, sometimes not. And the fact that in general it's a win percentage that's quite low, right? You know, we're talking 30% win percentage roughly, and I can increase that to around 40, but because of the amount of losers and sometimes it just goes straight down, you don't get a chance to trail and you get these big losses. Now I can easily, you could say, in real life or real time, I can be like, look, if risk is over let's say 40 pips, right? I think that's the reason, about 30-40 pips, I go position one only, right? So one position, and you know, I'll manage it however. So there's plenty of ways to work around that and minimize the risk. Now I want to show you where is it here? This is what it would look like, that exact same thing. That's what it would look like on the £200 account with £3 risk. And the way I calculate that is I saw my average risk was 20 pips, so across everything, like I said, it went up 20 pips times 2 positions is 40 times 7p, which is 1 micro lot. It's how much it was, £2.80, so I rounded up to £3 per risk, and this is what it would look like. So it's not too bad, but here's the way what I want to approach it, right? And this is my preference. So I've backtested this on pound dollar. Well, might as well go on pound dollar while we're at it. Pound dollar only, and since April I've had 120 trades now. A lot of these, I think quite a few maybe will cut down to around 30 due to me only taking them between 7 and 11. But I just wanted to get data. I wanted to see how it performs, and here's the way I want to enhance it. Yes, there is a few filters you can apply, you know, where is the RSI, you know, doing this, that, whatever, cool. However, a major filter for me, in my opinion, is just pure price action, right? And I want to add my discretion into this because end of the day, I've got this system, right? I'm quite confident in it because I'm more confident because of this rather than, you know, the pip count. I don't really care about the pip count like that. Like I said, because ATR is almost lucky, right? Where you hit a big win or you hit a big loser because it happens to be in a high ATR location. This for me is a more accurate representation of what it should be like. And what I'm looking to do is next week, so today I'm recording this on a Friday, so next week what I'll do, across the 20 pairs I track alongside something else, but you know, I'll be going down on the 5-minute and getting these signals. So for me, a valid signal, let's see where it would be. Can we force one out? I mean, whatever, doesn't matter, right? Let's say I've got signal to sell right there. Alright, cool. My stops are quite tight, ATR above the highs. And then target, you know, wherever I decide to put target based on the hourly, like I said, doesn't really matter. But what I want to do this week is, yes, over these 20 pairs, I want to, between 7 to 11, I might get maybe, I'd say about 20-30 trades this week, because it is a quite high frequency, you can say, strategy. So maybe 30 trades this week I might get, maybe less, maybe 10, it doesn't really matter. But what I'll do is, So every trade I'll track it, and here's where you can say I'll practice my discretion. But I want to be like, look, all right, cool, here's my signal, I have to sell here, right? You look back on the hourly and they're like, okay, do I want to sell here? So this would be me in real time. Do I want to sell here? And the answer might be yes, the answer might be no. Now, I only want to do it in extreme scenarios because, do say, sometimes I've had signals where, like, I'm pretty sure there was one here, right at the end of a very extended move. Right now, this strategy, yes, I do respect structure, but I'm more concerned about how extended are we in the move. And when it's something like this, when we're very extended and I have to buy up again, it's not ideal. Now this, you can say, oh, it looks like a winner, but imagine this on a 5-minute, right, with very tight stops and probably getting in around there. It's not ideal, right? So you're looking at 43 pips risk, you're looking at something like this. So obviously you get spiked here and it carries on forward, but again, it's not a great location to be buying at here. It's not a great location to be buying at. And I remember there was one or two signals down here to be buying, right? But we're massively overextended. So me using my discretion, I'm confident enough in avoiding these losses. And I'll track them as normal, but I'll simply have a column of saying, look, would I take this trade in real life? And it's simple as yes, no, why. That's it. Right, you know, I'll have my answer and I'll say why, because we're overextended. Maybe look at the real RSI, be like, look, we're at 96, you know, we are due some relief. Now remember, there was also a buying opportunity right here around the 5-minute, which when you zoom out on the 60, you're like, great, you know, strong uptrend, you know, now we've got the pullback, could get involved. However, because my stop loss was quite tight, I just got stopped out, even though I was very confident that this move would happen. Right, even though, you know, I was a little bit on hindsight because I've seen this chart before, you know, it's only, what, 10 days ago. But, you know, I was quite confident following that, and I got stopped out because my stop loss, it was too tight. And I knew it was a case where, look, realistically, in these situations, maybe you want to have a safer stop, right? And that's where I can maybe go half position size just so I don't increase risk drastically. And, you know, the rest is where it is. So I want to use my discretion, right? I want to add my discretion. I've got a decent system that provides entry signals, but I want to optimize it by using my discretion. I trust my discretion more than that. Otherwise, it's going to be dangerous enough to turn into a very similar situation to FTBs. Now, it's a little bit better because I actually believe behind the concept of the strategy where it's you see initial strength and then you buy up on this strength, or compared to the FTB where it's meant to be a bearish move in the market. I don't really see a reason for it. It's just a reason apparently from a institutional trader, and you know, it's not based on price action for me. So you know, it's a little bit different, but it's got that dangers of it being, because it's so mechanical, it can be so mechanical, right? Like even targets, I mean, let's say I was selling here for whatever reason on the 5-minute, but this is obviously the 60 stops wherever, you know, we see structure right there, we see structure right here. What I'll do personally is I would have an extended target, a very aggressive target, let's say somewhere like here, right? You get these massive risk rewards, and you know, it's almost me playing that expectancy of a big break. I'm not playing these small catches, small winners. I'm playing these big breaks, and that's the whole sort of reasoning behind the 50% trail. So my whole point is, look, I feel like it's quite important to see, first of all, can you trade this in real time? So obviously I'm going to be doing that in the next week, but in my opinion, the best systems, like in my opinion, are mechanical systems or very rules based with addition of your discretion. And you know, I pick and choose my signals on my day trading account, so you know, I decide if I want to be involved in the trade or not, right? It's all down to me. I like that responsibility. And don't get me wrong, like, we're looking at this spreadsheet, you know, we're looking at average winner however much, average loser however much. And when I'm tracking this, right, I'll track on the trades that I'm like, okay, I didn't take this because that. So even when I start trading live, I'll still track the ones I didn't take. And if I find myself missing too many winners, right, if I'm missing, you could say, you know, 5 huge runs that I should have caught, or, you know, the signals, you know, told me to, but I didn't take them because of my discretion, but I've only missed out on like 5 small losers, You know, I might have to change it back, but I like this freedom, and obviously it's something, it's a work in progress, and I'm quite confident, and I'm not willing to back test it on 20 pairs just for randomness. That's what I mean. That's what I'm doing this power week. And even then, personally, my opinion, I wouldn't back test it on all 20 pairs, right? That's straight up my opinion on back test. I don't, for me, um, doing it on all 20 would be a waste of my time. It's just genuine opinion out there. I'll do it on, let's say, pound dollar. Let's give it, you know, dollar yen, dollar, you know, maybe Aussie CAD or New Zealand Euro Aussie, whatever. So like five or six very different pairs, not like euro dollar, pound dollar. They're very correlated, so you don't really see that. But quite five unrelated pairs, and I'm assuming, to be honest, personally, I assume that they're gonna come back quite similar slash positive, and if they do, then you'll sort of, like I said, I don't believe in testing all 20 of them. If obviously 3 of them come back negative, 2 or 3 of them come back positive, then we have to look into it a little bit deeper, but and you know, potentially test the rest. But yeah, that's my approach. It's my opinions on how things should be done, and it's what I'll be going through with the next week. So yeah, hope you enjoyed. Hope you found some value. Like I said at the start of this video, you could say, make sure to check out the podcast, check out the 1 week free mentoring, and yeah, it's all in the description. Thank you for watching. Like, subscribe, comment, and yeah, in a bit.